Welcome to 3 and 3. My name is Jason Weaver. Today we're going to be talking about China slowdown, global recession, and negative interest rates. So China has been the single largest contributor of economic growth over the past several years. And currently, their economic data is pointing to a significant slowdown. There's factors affecting that. First of all, the U.S.-China trade war, the shrinking labor force because of the one-child policy, the swine flu affecting pork prices, and also the Hong Kong protests. So in 2015, China enacted one of the largest stimulus plans in the history of China, and real GDP peaked at 13.55%. And since then, China's growth has been slowing. But recently, that growth has fallen below 3%. What you're looking at here is the added year-over-year growth of the industry, the fixed assets investments, and retail sales. And you can see that peaking in 2014-15, and it's been slowing ever since. So the global recession. So historically, 3% has been a threshold for a global recession. Bloomberg's GDP forecaster predicts about a 2.2% growth in the third quarter. The IMF sees a serious risk to a global recession. And if you look at it, this all really occurred in China. Europe now has caught the cold, and we're seeing that through their bank lending, negative interest rates, retail sales, and also the growing trade war is slowing things quite considerably. So the slowing global growth, you can see this through the IMF's, the International Monetary Fund's, projections of growth. This is the last recession we had in 2008, 2009, and we perked up from there, and we've been slowing, and now the reading has been downgraded, and we're about that 2.2% level as we look into 2019 and 20. So negative interest rates. So central banks around the world have set interest rates below zero. Kind of crazy to think, but what they're trying to do is they're trying to force commercial banks to be dissuaded from carrying balances. And so they'll make loans. And when they make loans, that potentially could lead to growth and also inflation. So what you're looking at here is all the interest rates around the world. And look at all the red. That is the negative interest rates. There's $15 trillion of negative interest rates around the world. The green is positive interest rates. So if you look at the United States, we have the most green in all of our actual categories, from a 1-year all the way out to a 30-year. But certain countries like Switzerland, even their 30-year bond has a negative interest rate. So the total negative yielding corporate bonds also stands at about $1 trillion. And look at how that's just dramatically increased over the last year. So investors are searching for yield all over the world, and it's hard to find, especially if it's good bonds. Thank you again for joining us for 3 and 3.